Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Nvidia, the world's most valuable company, underwhelms on earnings as investors digest decelerating growth. This as its CFO weighs in on the Trump administration's 15% commission on chip sales, telling us the plan needs to be codified first. And we break down other earnings from the tech world, with Snowflake, HP gaining on results and Dell on deck after the bell. But first, we check in on this market, which of course is dragged lower by one key stock. We're looking at Nvidia off by 0.9%. Look, in after-hours trade yesterday, it was more than 3% lower, as people just digest a company that is now bringing revenue in with growth of 50%. But it's not the 260% growth that we were used to in previous years. And I'm interested in the focus on China in particular. This is a company that has no H20 sales for fiscal second quarter, no sales baked in for the third quarter, but there is opportunity there. Just listen to what Jensen Huang said on the call.
So I think the opportunity for us to bring Blackwell to the China market is a real possibility. And so we just have to keep advocating the sensibility of and the importance of American tech companies to be able to lead and win the AI race.
For more, Bloomberg's Ian King, who covers semiconductors, who was up late last night, does this with us now. Look, China is the big overhang, and why some think that perhaps the numbers were a little light, largely because we didn't know whether to factor in Chinese revenue or not, Ian.
Yeah, I mean, they said that in the release, and there was nothing China-related in there in terms of the data center stuff. Then on the call, they gave us a slightly extended picture which said, look, if everything goes okay, if everything gets sorted out, we might have up to $5 billion worth of Chinese revenue. And if you add that back into their forecast, then this is an amazing quarter for them. So there's a lot of moving parts.
There is, and it feels as though it's a knee-jerk to send the shares lower. Many would feel, the analyst community out there saying, look, strip this out, and this was actually quite a rich beat. But you got even more detail from the CFO in particular. Colette Kress, walk us through what she said about that 15% stake taking that the government wants on future H20 sales.
Yeah, I mean, I think it's important to frame this appropriately. This isn't some kind of political stand or dispute with the Trump administration. What she was doing was what investors would like her to do, which is to, her fiduciary duty, which is saying, look, there is no mechanism by which I can give 15% of this China-related revenue to the government as statutes currently exist. Something will have to happen before I can do that. So she was really just making a point and reassuring investors that, look, we are running this company properly according to the rules that exist.
So give us the detail on whether they do or do not have licenses to certain Chinese customers yet in the bag, and whether or not that $2 to $5 billion worth for the quarter coming could become a reality, Ian.
Yeah, and again, I mean, they were very clear to say, look, we've got a few licenses right now, but there are so many geopolitical variables in the mix here. What does Beijing want? What does Washington really want? Will there be more licenses? Will they be given quickly? And all of these, to be fair to Nvidia, are not knowable right now because, as we know, things change on a daily basis. With a social media post, the whole world changes. So I think, when people calm down and look at what was said, they'll perhaps realize that this is something which, this is a company taking a conservative, perhaps measured approach to it. And Colette told us, and that was a message that was given to investors, look, we think we'll get some of this. We're not saying this has all gone away, but we just don't know when and how much, so we're going to be careful.
Going to be careful, Ian King. Always careful with his words. We appreciate it. Let's get an investor take. Someone who has dug deep onto the detail is Nancy Tengler, CEO, CIO at Tengler Investments. You've been taking some money off the table with Nvidia recently, but you've still got significant exposure. And Nancy, what's so interesting is this question mark on China. What's your read? Because again and again, Jensen Huang kept saying there's a $50 billion opportunity here.
Right. Yeah, thanks for having me, Caroline. And I agree with Ian on just about everything he said. I mean, China's critical, of course, but they already took the charge last quarter. And so the big disappointment overnight was they came in below the whisper number, but their guidance did not include China at, I think it was 54 billion. And the whisper number was at 55. So if you back out China from the whisper number, they actually beat not only the street, but the whisper number on guidance. So I'm giving it a triple play, a beat, and raise. But I think it doesn't make, I mean, if this was a disastrous report, the stock would be off significantly more than it is. We trimmed some at 179. That's where it's trading right now. We put it to work in some other names like Palantir and CrowdStrike, and we got some good execution there. But it's still 4% of our portfolios and a candidate for our 12 best ideas portfolio. So I think that the report was excellent. Decelerating growth is something that Microsoft dealt with Azure early days, from 90% now down to 30. I mean, I don't think Nvidia's valuation is even as expensive as Microsoft. If you look at it on price earnings to growth basis, it's below 1 time. So
yeah.
I think this is an opportunity.
I mean, to that point, when a $4.4 trillion company is still delivering in excess of 50% revenue and earnings per share growth, it's pretty extraordinary. But the opportunity is still so extraordinary. Like, I think Jensen Huang did a very good job at reminding us $4 trillion is how big AI infrastructure spend could be alone. But he wouldn't really give us an amount of how much his take is of that market. Can you do the math on that a little bit?
Well, yeah. I mean, if you look at earnings growth expectations for 2020, fiscal year 2025, it's 113% growth. For 26, it's 50% growth. So if you factor that in to the total numbers, I mean, this could be an incremental $100 billion in revenues over the next 12 months. Don't forget too, sovereign is starting to pick up. That was about 20 billion euro in expectations. And then you've got the buyback, putting a floor under the stock. They announced a $60 billion buyback. So the market share take from Nvidia continues to remain or grow. And what was interesting to me today is that you're seeing AMD and Broadcom up on the news, but Nvidia down slightly.
It's really interesting, actually, that all the Chinese names are up on the news as well. You just think of what's happening with SMIC, what you're having with other key players who are building out AI accelerators for China. AMD, it really reminds me of AMD, because they beat, and in many ways they raised, but they couldn't give clarity on the future of China, and they were punished because of that. Do investors just need to understand that it's very difficult to get real clarity on China?
Yeah, and Caroline, remember too, there are investors and then there are the hedge funds and the algorithms. And the latter tend to drive the volatility. Investors like me look at opportunities like this and say, I want to be in this for the long term. So last summer, we picked off Nvidia at $100 a share. Remember last summer, people were saying the story was over, it's not going to continue, the hyperscalers can't continue to spend CapEx at this level. And not only did they do that, but many of them increased their CapEx budgets. So if you think about data center, it's 29% growth, right? But China, he's saying, could grow at 50%. So to answer your previous question, China's growing faster than the rest of the world, but 29% is unlikely to be the growth number. It's likely to be closer to 30 to 40% in data center growth for Nvidia in the coming year or two. So I think, again, as I've said, you want to take advantage of these periods of confusion or melancholy around the stock's future performance and add to your holdings if you own it and initiate if you don't.
Okay, and then the real opportunity is the fact that the cadence of innovation keeps on coming. You've got Blackwell Ultra already in the fabs, according to the CFO, is the Rubin chip and architecture. Where does that take us?
Yeah, I mean, I think it takes us to quantum and then some. I think, robotics, we've launched a new fund that we're incubating at the firm, and it's called New Era Thematic. And it's all of the above. So, it's not just nuclear, it's quantum, it's robotics, it's photonics. So this is an area that investors need to be sure they're not underestimating. I heard the naysayers overnight, it's decelerating the growth, there's not, AI trade is over. It's not even close to over. We're in the early stages. And I think you want to continue to be looking around and look for those that are going to get left behind. And there will be companies, I believe, like Adobe, that will probably get left behind. But then you want to focus on the winners, and you don't want to shy away from them too early. And this is, I think, Rubin is the next stage. Blackwell, we haven't even realized the staggering demand for Blackwell that Jensen Huang spoke about last night. So yeah, strap in. It's going to be volatile, but volatile to the upside.
It's interesting. Yesterday, we had Jay Gambetta of IBM on talking about their deal, well, that partnership with AMD, right. The fact that they're looking at the future of supercomputing, twinning with the future of quantum as well. You're talking about that as an area of growth. Where are these companies, though, managing to pick away at NVIDIA's chance really with inference? Because, yes, they are the chip of choice. They are the architecture of choice when it comes to training models. Are they really the only game in town when it comes to inference?
No, I mean, I think not. But that doesn't mean, it's just like, you know, maybe you could argue that Microsoft sort of pioneered cloud computing. Larry Ellison might disagree with us from Oracle, but you know, you see eventually that their growth slowed, but they're still a dominant provider, and AWS obviously would disagree with me on that as well. But so I think you have to step back, look at where the marginal erosion is coming from. Yes, we know Apple and Microsoft are developing their own chips. That's fine. I don't think that's going to change the dynamic. It goes back to Jevon's paradox. So when we had the DeepSeek news, you know, everybody sold the stocks. I happened to be on air that day and said, listen, this is an opportunity because more begets more. And so I think this is, I mean, that's really the story, that they can lose share and still be growing at rapid pace. And the margins, we haven't even talked about the margins, you know, above 70%. I mean, I don't know what there is to complain about.
And
trading at a price earnings to growth.
And a $60 billion stock buyback. I mean, and still the stock goes away some. Nancy Tengler of Tengler Investments. It's always so good to have you on the show. Thank you very much indeed. Wearing a leather, an ode to Jensen there. Meanwhile, coming up, more on Nvidia as China trade tensions. Of course, they're weighing on earnings. We're going to speak with Theresa Payton, Fortalice Solutions CEO, on the China AI landscape. This is Bloomberg Tech. Check in on those Nvidia shares. We're off by, let's call it 0.9%. For a more than $4 trillion stock, that's $38 billion that you've just wiped out in terms of market capitalization. Nvidia's business, I mean, the overhang has been China, clouding the area because of trade tensions. But the company now saying that unconventional plan, of course, by the Trump administration to charge a 15% commission on AI chip sales to China, well, it hasn't progressed, actually, beyond its early stages. Let's check in with CFO Colette Kress told us earlier. She said to Bloomberg, I don't have to do this 15% until I see something that is a true regulatory document. Let's get more from Bloomberg's executive editor, Mike Shepard. You really sit at the intersection of politics and technology, Mike. So the ball is in the administration's court. They've told us that they're going to take 15%. Well, where's the regulatory approval here?
Well, that's really the question of the hour here in Washington, in Silicon Valley, and on Wall Street. When are we going to see the fine print on this? And as Ian noted at the top of the hour, the company is proceeding very carefully on this front. It doesn't want to commit without seeing something in writing, because the terms could even change, especially with this administration halfway through. So they want to make sure they see this in print and that they understand the legal and regulatory mechanism under which they would make these payments to the U.S. Treasury. Remember, it's not quite a tax. It's not quite an import fee. It's really kind of hard to figure out how they would define it. And in a way, it is holding the company up a little bit in terms of making those sales once again of the H20 AI chip to Chinese customers. They don't want to proceed too fast, as the CFO suggested they had the right to do. They have some of the export licenses in hand. But then again, if they proceed without actually giving the government a cut, that does risk angering the administration. And this is a government that Jensen Huang, the CEO of Nvidia, has tried very hard to cultivate good terms with. He has visited with President Donald Trump a number of times, and the two men have built this rapport. So they want to make sure they are treading carefully here, Caro, because they're playing the long game. They are looking ahead to how Trump can help them in China.
And I think Jensen and his CFO, Colette, are trying to really remind the the administration just how much money is left on the table. Up to $5 billion worth could be made in H20 sales in this next quarter alone. They're talking about the $50 billion opportunity of China sales if they can get a modified Blackwell architecture into the country. And that really was what Jensen was talking about, his hopes to talk to Trump about that. And actually, the administration, in fact, President Trump has put messages out, posted on his Truth Social about the fact that he expects some sort of request.
Yes, and he is signaling his openness to granting that permission to the company to sell a scaled-back version of the market-leading Blackwell chip to Chinese customers. Now, again, we would expect the president to insist on getting his cut. Would it be 15%? Would it be more? What other demands might he put there? But again, this would be very much in tune and in line with what the administration is doing, not only with Nvidia, but also in a way trying to, I guess, restore some of those economic and political ties with China that we've seen bruised over the years.
Mike Shepard, we thank you so much. Bloomberg. Let's get more insight now. Theresa Payton's with us, Fortalice Solutions CEO, former White House Chief Information Officer. At the moment, we're seeing Chinese rivals gain on the back of this lack of Nvidia competition right now. What do you make of it?
Well, all I know is we're going to have to figure out there's a long race here and a short race here. And we have to secure not only our global leadership, but also our intellectual property. And that's really some of the underpinning of the discussions here of, is there a 15%? Is there not a 15%? What does this mean from an export control? So a lot more to come on this. But obviously, China is amping up their part in the race, trying to win the global war on who's going to dominate AI.
What is the IP risk?
Well, the IP risk, so even though we're talking about sending a modified chip over to China, in my opinion, based on my years of experience, it's like handing over the keys to your R&D lab and saying, just be in the small QA lab, not in the bigger lab, and don't look around. You wouldn't hand the keys to your R&D lab to your competitor, and China is our global competitor here for this technology. So that really what we're thinking about here is how could they get access to these chips and perhaps reverse engineer everything from performance to how things behave. Really, you just don't know what they're going to be able to do once they have their hands on all these chips.
Theresa, let's say you're back as the White House Chief Information Officer. What are you advising President Trump as to whether Jensen should have access to the Chinese market?
Well, I think this is a tough one because the private sector does have the right, companies do have the right to sell their goods and services all around the globe. We don't have a blockade on selling technology and other goods and services to China. So this is a very delicate balance here between a White House administration and a private sector organization. And so really what you have to do is look at the laws we already have on the books and then say, what kind of safeguards is this US-based company going to follow based on the laws on the books? What types of inspection processes? What types of control processes? There is a playbook for doing this, even though this technology is new, and so we have to look at this playbook. The question is whether or not new rules and regulations are going to be codified, and I think that's the open question that Nvidia is having to deal with.
Nvidia put in its 10Q that it could be exposed to potential legal implications because of this 15% issue. What would it face in terms of legal issues?
Well, if we end up codifying some type of a new barrier to the market in China, or enforcing one of the existing regulations in a way that hasn't been enforced before, then Nvidia would have to make the decision of, am I now blockaded from actually selling to China, or do I have a lot of burdens on me that maybe don't exist for other companies who are selling technology to China? Remember, you've got big tech who's in China, social media is in China. It's not just Nvidia who is selling goods and services to China. And so they may decide, well, this is an undue burden placed on us. So they may decide to take on a lawsuit, or they may find themselves answering to, for example, CFIUS. As you know, TikTok USA has had a lot of legal challenges and legal bills as it relates to how they operate and CFIUS interpretations of how they operate. So I think they're just kind of looking at past cases, precedent, and then also looking at the president's remarks as a potential future precedent and deciding that there could be a risk for a long, protracted legal battle.
Theresa, we heard from Jensen Huang there's a $50 billion opportunity in this year alone in China. But push out 5 years. Does that exist at the rate that the Chinese government are trying to push their own companies away from the US tech stack?
Yeah, it may not exist in the future. That is a tough one. All I can tell you is from the front lines of working with companies who have done business with China, it is a very tricky proposition, especially as it relates to cutting edge technologies, whether it's sort of like clean energy, whether it's computer technology, and it's very difficult and challenging to really understand what the regulatory environment is going to be and the protection for your intellectual property. You know, kind of the big elephant that we're not discussing in having all of these conversations is we have a new, more detailed report from the FBI on Salt Typhoon. And the findings from that report are stunning. We're talking 80 countries were impacted, not just the United States. And the access to metadata, phone calls, and other information. You know, this is one of those things, and China denies that they had any part in this, but this is one of those things where we're seeing sort of this vacuum cleaner effect of China basically vacuuming up intellectual property, data, information to use it for economic espionage.
That was a breach that really hit the major US carriers, in particular Verizon and AT&T and T-Mobile. Theresa, Payton, thanks for reminding us of it. Fortalice Solutions. Coming up, 3 people, they're charged for allegedly stealing TSMC trade secrets. That story next and more. This is Bloomberg Tech. It is time now for Talking Tech, and first up, DD Global will pay $740 million to resolve a shareholder lawsuit concerning its fraught 2021 US IPO. Now, an offering that not only attracted intense scrutiny from Beijing, also preceded the company's delisting. The ride-hailing giant announced the deal Thursday alongside its second quarter results. Plus, Taiwan, the prosecutors have charged 3 people for allegedly stealing trade secrets from TSMC, alleging that proprietary tech was stolen to help improve at Tokyo Electron. Now, Taiwan is seeking jail terms for at least 7 years for the trio, citing threat to the island's national security. And Delivery Hero cut its earnings guidance for the full year. This after a weak dollar and South Korean won cut into profit and free cash flow. Look, the company saw revenue rise nearly $8.4 billion in the first half, but faces increased competition from rivals in Asia and the Middle East. Now, coming up, more on Nvidia. Let's take a look at the stock and other global chip-exposed names. Shine a light on ASML. It is lower in sympathy. That's a European chip equipment maker. Camericon, though, this is the upstart in China trying to eat in on AI accelerators in that country. We're up 15%, record high. It has doubled its market cap in this month alone. This is Bloomberg Tech. Welcome back to Bloomberg Tech. We take a look at the earnings story because benchmark's relatively flat. We're actually higher just on the likes of the NASDAQ 100. I'm looking at what's happening with Snowflake. Having an absolutely brilliant day. Best day since November 2024. We're up 18%. Look, they are showing that the desire for agentic AI is working in their business right now. Revenue grew 32%. They beat and they raised as well in terms of their forward-looking guidance. The analysts across the street really liking the strength coming from this particular software company that many had anxiety, perhaps that new AI startups would start to eat into the business model. No. They're managing to show real growth here and retention of customers. Move on, though, and we're all a little bit lackluster about what happened with Nvidia last night. Look, this is a company that delivered 56% revenue growth for their fiscal second quarter. $54 billion is promised for the fiscal third quarter, and that's not including any Chinese revenue. That's only upside. But this is already a company that was very close to its record highs. We're off by 1.25%, but off of those lows in the pre-market trade. Here is the reaction and the results from a few analysts on Bloomberg TV on Nvidia.
When we have a beat and stocks don't go up, or a hot stock like Nvidia doesn't go up, or it starts to roll over a little bit, that suggests to a trader and a technical analyst that everyone who might own the stock already does. But we're nowhere near there yet.
The reason the stock has recouped some of those losses and I think will retain strength is because of that guide for Q3. It was very strong. It's really all about Q3, and it's because Blackwell and Blackwell Ultra are starting to ship. And if you know that story, you're not selling this stock right now.
they were very good about signaling to the market that the China overhang could continue, and that has about a $5 billion impact in the next quarter's numbers. So having said that, 54 billion represents a very strong showing, which means they expect hyperscalers in other parts of the world to pick up that slack.
More reaction for you now from an investor. Daniel Pilling's with us, Sands Capital Portfolio Manager. So why is the stock down?
Well, I think there's a few reasons. One, stock had a good run into the quarter. And two, it probably slightly missed sort of the buy-side expectations. And it was mainly around, I think, China. And then secondly, Blackwell is still a little bit supply constrained. So they're ramping it as fast as they can, but I guess the ramp wasn't fast enough. But I would say, though, to us, those were pretty strong results. And maybe one interesting fact to look at, if you take out the China revenues completely out of data center, then the rest of the world for them actually accelerated from about 60-ish% growth in Q1 this year to a guided 80% growth in Q3 this year. So actually, NVIDIA ex-China has been accelerating, which I think is really strong.
I think that's a really interesting take. We had Vladimir Galibov from Omdia yesterday talking about how Europe is stop-start in certain countries. You've got Denmark really going hard on sovereign AI, other countries less so. We got told $20 billion for sovereign AI. Is that strong enough for you, Daniel?
Yeah, I think that's a great number, but the truth of the game is still within hyperscalers and AI startups. I think that's where the real action is for now, and it's a much, much, much larger number. And I think the interesting aspects there are, one, as Jensen noted, that reasoning AI is so much more compute intensive. He quoted 100 to 1,000 times more on the one hand side. And then on the other hand side, though, it's also much better. So it reduces hallucinations. And he also mentioned that the return on invested capital you receive from buying these chips is phenomenal, right? He mentioned if you invest $3 million today, you can make 30 million in token revenues in short order. So I think that's where the real action is as of today.
And is that why the real action is talking about where Rubin takes us, the cadence of innovation over at NVIDIA?
I think so. I think Rubin will, again, the most important thing that NVIDIA is doing is they're increasing the performance per watt. And they noted that it costs about $50 billion for each 1 gigawatt data center. Rubin will, again, improve that performance per watt, which means that NVIDIA's competitive situation improves on the one hand side, but also on the other hand side, you can do more compute, you can build better models with Rubin, which means it's a self-fulfilling prophecy a little bit, because whatever comes out of these models will, again, have higher IQ and effectively bigger and better apps.
You're not worried in any way about Amazon's Trainium, about Google's TPU, the fact that the customers are innovating themselves?
Yeah, no, I think it's our job to worry sometimes, but we've looked at this in detail. And I think the idea here is, again, to say, well, so here's NVIDIA. They're building a giant system of a company. They have both networking, CPUs, GPUs, hundreds of different suppliers, and they put the software on top. They say, and we believe in this, that they are the best performance per watt supplier in the industry, bar nobody else. And as long as that is true, something like Trainium cannot compete simply because they don't have the scale, they don't have the system, and they don't have the software. So NVIDIA, to us, remains the winner in this sense.
And that's what's interesting about Jensen Huang trying to say, look, we are more than just hardware in many ways. We are the one-stop shop, and we're leaning more into that. Did he lean more into the future opportunities enough for you, the robotics side of things? Of course, automotive remains a bit of an overhang when it comes to China, but thinking also about, well, quantum and real future here.
I think NVIDIA is probably the company in the world that runs the fastest that I've ever seen. I mean, what they're trying to do is they're trying to align hundreds of different suppliers. They try to design a GPU on an annual cadence, and they're trying to update their systems on an annual to 18 months cadence, which is unheard of. At the same time, they're focusing on quantum, robotics, et cetera, et cetera. So I think NVIDIA is running as fast as anything else I have ever seen. And if I may mention, too, I think quantum is probably going to slot into the NVIDIA ecosystem by saying they have CPUs, they have GPUs, and at some point they'll have quantum somewhere in there too, and you can just switch between those various sort of compute layers.
And that was what was interesting with IBM and AMD's partnership, the idea that almost you reference how these reasoning models work. Well, I'm thinking of GPT-5, how it just pushes you towards the best possible model for your question. We're going to have the best possible computing standard for your general task.
Yes, I fully agree with that. The best possible, as well as the cheapest and the fastest. And again, I mean, as we think through the next few years, the question is like, how much more compute can NVIDIA sell And it truthfully continues to be a question of the scaling laws, right? And we've seen with Grok 4 that compute still provides better and bigger models. We're going to have Blackwell clusters scaling in the next 12 months, or 6 to 12 months. And hopefully we'll be seeing good results coming out of whatever comes after Grok 4 and ChatGPT 5. And that's what ultimately truly going to drive the bus for NVIDIA in terms of demand and in terms of their revenue outlook.
So you think we should think more about Colossus? We should think more about what Meta's doing in terms of, well, it's scaling in Louisiana. Should we figure China out entirely, considering the government wants to push its own homegrown domestic talent anyhow?
Yes, I think we should. And I would actually argue what China is doing seems to be relatively rational. What China is basically saying is that you're trying to sell us a chip that's based off of an architecture that's 3.5 years old. And secondly, we've also grown a local AI architecture or a stack that has caught up somewhat to that old chip. So unless you start selling us a newer derivative of Blackwell, we don't really maybe need you as much anymore as we needed you 3 years ago. So that all seems to make sense. And I don't know whether the licensing will work out or not. But the interesting piece is if it does, that's a big, big upside for NVIDIA, because Jensen noted it's a $50 billion market. And if they're allowed to ship a derivative of the newest chip, their market share there should be enormous, because there's nothing in China that even can remotely compete with what NVIDIA has.
$54 billion forecast for fiscal third quarter, and not even factoring in China. Daniel Pilling of Sands Capital, it's great to have you on. Coming up, we'll talk about some of the other earnings that are coming out. Don't forget, we've got Chinese car maker BYD and others. This is Bloomberg Tech. All about Nvidia, but there are several of China's big tech names also reporting earnings this week, including Alibaba. Now, the company has been stepping up its AI efforts since Chinese firm DeepSeek released its own R1 model, remember. Bloomberg's Isabelle joins us now. This stock has been on a tear this year. It's up 42%. What more can it give in terms of where it is on AI and cloud?
I think it's like everything in tech. Investors just want more and more and more, and even if you beat, it's still not enough. So for Alibaba, they're slated to report on Friday, and they're likely to really highlight their AI strategy. But if you look at their peers, Tencent and Baidu, they're likely to kind of disappoint, because it's really going to struggle, or it may struggle, to show how its big investments in AI will be paying off. I mean, these companies, ever since the ChatGPT came into the picture, they've invested billions of dollars in AI. They've rolled out their LLMs, they've infused their flagship products with that, but making money has been hard. Why? Because analysts are saying that Chinese users, unlike Western counterparts, are reluctant to spend on premium paid subscription models.
What's also interesting is just everyone's trying to get on every other game. They all want to be like the mega apps to a certain extent. And you have a super app with Meituan, for example, that the fierce competition in food delivery.
So that too, and then I feel like if you look at, for instance, the Tencent earning this month, they showed revenue from that business, including selling AI services, growing more slowly. Baidu also, when it comes to the cloud business, didn't expand fast enough. So I feel like, how will you improve, to your point? And if you look at the contribution of AI, it's really going to dampen the growth outlook of Alibaba. I mean, and it comes at a time when their e-commerce business is kind of struggling compared to their rivals. Consumption in China still remains weak, even as the economy slightly improves. So really lots of moving parts for Alibaba. But in relation to Nvidia yesterday, we do have Bloomberg Intelligence saying that despite uncertainty over Nvidia's ability to provide H20 chips, all these three, Alibaba, Tencent, and Baidu, are still well positioned, at least in the medium term.
Bloomberg's Isabelle. We love our breaking it down. Thank you. Let's stick with Chinese firms, but shift gears to the automotive industry. Hong Kong shares of electric vehicle maker BYD fell yesterday on concerns about possible decreases in exports after Mexico announced plans to tariff China. For more, let's bring in Bloomberg's Craig Trudell. So BYD on the day had some issues around maybe accessing Mexico, but boy, are their sales in Europe going well. What were they? Were up threefold, while Tesla actually saw sales drop 40%?
Yeah, we've seen BYD really put a dent in the European car market and take advantage of the softness for Tesla, maybe be a sort of factor in that softness where, it's not been uncommon now for BYD to actually outsell Tesla in this region, which would have been unthinkable even just a year ago. This was a company that was really sort of taking off in its home market, and yet overseas sales, it still had a long way to go. So we've seen some progress on the export business. I think we have seen maybe a little bit of a slowdown and some softness at home. And that's been the real story this year where, for all the sort of continued growth that we've seen out of BYD, there's some real questions starting to emerge about can they hit the full year sales figures that they were expecting for 2025.
Yeah, because what they've already sold 2.15 million in the first half of the year, but that's only less than 40% of what they're aiming to do for the full year. So they're having to discount in some ways.
Yeah, and I think it's really an ironic story in China, right, where you've seen so much state support for this industry, so much attempts to sort of foster this really competitive auto industry, and particularly EV industry, and yet maybe we've seen sort of some overdoing of it, right, in that we have Chinese companies with BYD maybe front and center discounting their lineup in really aggressive fashion, concerns about suppliers not getting paid in a timely manner, and maybe some concerns too about just how long this can continue if we just see manufacturers aggressively discounting. At what point is enough, and do we see some companies go out of business? So you've seen this kind of campaign in China on the part of the government to do away with what people refer to as a price war, and yet some real reluctance on the companies to sort of take heed there.
Bloomberg's Craig Trudell on BYD, we thank you. Now coming up, we'll discuss what investors are hoping to learn from Dell's earnings later. Stock climbing today. Interesting, as of course it's very much wrapped into the Nvidia trade. This is Bloomberg Tech. Now, we're also keeping an eye on Dell today. The stock is climbing ahead of earnings release of its own after the close. Investors looking for signs that the company will boost its forecast for AI server shipments. Let's bring in Bloomberg intelligence analyst Woojin Ho. Woojin, it's interesting that it's actually higher on the day when Nvidia is down. Often they move in sympathy with one another, but we're expecting big things.
Yeah, so there's a good thing. There are a couple of things that's going on with Dell this morning. Relative not only for AI but also for PCs, right? Nvidia was more China related. Dell has no China exposure as it relates to AI servers, and I do expect them to report $7 billion in AI server revenues. They guided to about $15 billion. Street, some of the bull case on the street has potentially guiding up to $20 billion. So that's the bogey that the street is looking for.
HP is an interesting read if you're thinking about PCs. And HP had really resilient PC strength. It's about the AI PC, apparently, and actually the commercial adoption of that seems to be holding things up, as well as Microsoft's upgrade. Woojin, is that how we read across from perhaps HP to Dell?
Yeah, that's exactly it. So that's the second tailwind for Dell. Let's keep in mind that Windows 11 upgrade cycle is actually going strong. And what we learned from the HP earnings call is that only 50% have actually upgraded to Windows 11. So that means we have an elongated Windows 11 cycle. That's going to benefit Dell. How? 80% of their revenues come from commercial PCs, and those are the customers who need to upgrade, and Dell should be a beneficiary from that upgrade cycle. And the PC business actually has been more resilient, so HP results essentially tell us that downside risk on the PC might be limited, at least for the near term.
The thing with Dell is everyone's very bullish on it. We've got 22 buys across the analysts, 0 sells, and actually the price is pretty close to overall consensus price targets. How much is already baked in to a good set of numbers?
Yeah, let me tell you how much is baked in. I think from a valuation perspective, 14 times forward earnings. If you look at HPE, which is another enterprise IT company, they're only trading around 11 times. So there's a lot of good news baked into the shares from a valuation standpoint. So sales upside is expected. Now, I will want to caution some people heading into the print. There are a couple of red flags. Other enterprise IT companies are not benefiting from an uptick in spending. NetApp reported last night, Nutanix, Cisco a couple of weeks back. They all cautioned U.S. federal spending as being weaker than anticipated. Keep in mind that Dell has roughly about 3% sales exposure to the U.S. Fed. So if there is any pocket of weakness, that could be one and a yellow flag that I want to raise to investors heading into the print.
So thorough. Thank you. Woo Jin Ho, Senior Analyst for Bloomberg Intelligence. So appreciate having you on. Let's get back to the key story of the day, though. It is Nvidia, the world's most valuable company. But there are other companies around it that tell us a hardware versus software story. Let's bring in Bloomberg Intelligence Senior Analyst Mandeep Singh. Look, when we're anticipating Dell doing very well on AI servers, this just speaks to the strength of AI adoption that some are perhaps sleeping on a bit today when it comes to Nvidia's numbers.
Yeah, and look, I mean, when you look at the overall ecosystem, this quarter we saw Microsoft Azure growth accelerating to 39%. Now Snowflake and MongoDB outperforming. Just when you connect the dots, you can see if Microsoft's AI consumption is going up and it's reflecting in their cloud numbers, who is the user of that cloud consumption? It's your Snowflake. And so from that perspective, it's all intertwined. Dell doing well, Microsoft deploying that on their cloud, Snowflake actually seeing an increment in their product growth because companies are deploying more AI agents. So you can see how the ROI question is getting answered when it comes to that AI spend.
It's like the whole food chain, isn't it? You've got the picks and shovels with the Nvidia, you then got the user of that's Microsoft, that's going into then the use case for Snowflake. Talk us through the Snowflake numbers, because the shares are up more than 20%. There was clearly some anxiety built into these numbers that we were going to see competitors take a bit of an edge on agentic.
I mean, look, traditionally, database businesses are very sticky. It's just right now we are in an environment where everyone is trying to figure out what gets disintermediated by LLMs and AI agents. And all the software companies were getting beaten up because everyone thought LLMs can do everything that these software products do. Well, guess what? If you're trying to deploy an AI agent, LLMs don't have the data that you want to customize your chatbot on. Snowflake does, or Databricks does, and that's where MongoDB does. And all these database companies are what you need to customize your chatbot experience to your particular use case. And I think that's what you're seeing in the numbers. You're seeing them sequentially outperform.
I mean, can we look at MongoDB for a second? 2 days.
Yeah.
You pointed this out. It is up almost 50%. It is the best 2-day run for the company on record. So they really managed to push back also on that MIT narrative that perhaps people aren't getting any bang for the buck when it comes to using AI pilots as well.
When it comes to valuation multiples, what we have seen traditionally is companies that grow at 30% will trade at 20 times sales. But once that growth comes down below 20%, that multiple goes from 20 times to 5 times.
Wow.
So that multiple compression is always huge in software, and that's why that top line growth is so important. I mean, Snowflake going back again to 30% plus growth, you will see a multiple expansion. It's not as if the story changed completely, but just the multiple that investors put on these companies growing over 30% versus under 20%, it's huge.
But let's go to, say, then, a multiple on Nvidia. It's not that high if you're thinking about a blended forward version of the price to earnings, estimated price to earnings. It's like 33 times.
Yeah, and look, with Nvidia, the biggest concern is it's not a recurring business, although they are proving that they can keep releasing a new architecture every year and it becomes a recurring refresh cycle when it comes to their data center chips. But that's the biggest, I would say, risk is right now they are growing over 50%. They said hyperscalers will increase their CapEx by 50% next year, so that translates into similar growth for next year. But it's very hard to sustain that. I mean, do you think CapEx will keep growing 50% in perpetuity? No. And if your largest customers are 4 hyperscalers, then that's a big risk, and that's what you have to model for 2 years from now, 3 years from now.
Mandeep Singh, he's always modeling for us from Bloomberg Intelligence. We thank him. That does it for this edition of Bloomberg Tech. Do not forget to check out our podcast. Find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg Tech.